Welcome back, folks. Let's take a look at gold. In today's video, I want to talk a little about how to identify reversals, okay? And then we'll also touch on what's next for gold. Also, I'd like you to like, comment, and share my videos because I want to help as many people as I can. Also helps the algorithm to distribute the video to more people, okay? So that's something you can do for me in return for the value that I'm providing to you. Now, we're still in breakout for gold, okay? Today is Wednesday, which is the middle of the week, and so you should expect a lot of volatility in the next couple of days as we end the week for a few reasons. One, in gold, we've been breaking out since last Thursday, okay, so we've just been going up, and we also have a lot of news announcements over the next 3 days, so you got to be very careful, okay, and really you should be using this time to learn, okay, monitor price action. That's really what this channel is about, okay. Now, I want to start firstly with identifying reversal patterns and how you can expect repricing lower when you're at these highs, okay? So we're still breaking out. Gold's been having a nice run up, and you have been watching me trade this market live. It's my favorite market. It's the only market that I trade, okay? I'm going to jump down to a 1 minute time frame. Now, I'm not saying that you should trade on a 1 minute time frame, but it's a 1 minute time frame that I use to identify entries, okay? So when the market's breaking out, just jump back to a 15-minute chart. We can see that the market is breaking out, okay? Just going higher and higher and higher. Now, I want you to notice that on this last part of the day, in getting closer to the New York session, look how choppy that is. What have I said about when you see this kind of choppiness? That is the false manipulation move, right? The market's crawling up to fulfill some kind of objective. It's also the market makers accumulating or distributing their position based on where you are at, whether you're at the high or the low, okay? Now, also, I want you to recall something that I say all the time, that it's between 9:30 a.m. and 10 a.m. that the market will make a low or a high. So if you recall my trade earlier in the week, I took a long trade in the New York session at 9:30. That was this one here. At that point in time, we were at the low of the day and hitting a key rejection block, which is going to be that support PDRA. So at 9:30, as I've said, the New York will be the low or the high of the day. So if you're at the low of the day at a support zone, then 9:30 is going to make the low. Okay, that's what I mean when I say that. So if we look at yesterday's session, this is 9:30. We're at the high of the week, high of the month, okay? And we see this choppiness, and we're having a breakout. So we have a pump, right? You remember, I look for the pump, for the dump, or the dump for the pump. We'll be having a pump up, right? With the high of the week, high of the month, it's right at 9:30. So 9:30 here is at the high, right? And so where are you expecting to go for at the high? Okay, you should be expecting some kind of a pullback, okay? Very choppy, hard to identify an entry, but as I said, the best entries are at 9:30 to that 10 a.m. when you're trading gold. That doesn't mean the market doesn't move at other times. You've seen me take a long yesterday in London, okay? It really depends on the time zone you're in and what session suits you, okay? 9:30 is the New York equities market open. That's why often the market will move at 9:30 a.m., okay? So we're at the high of the week, the high of the month. Therefore, we expect a pullback, right? It doesn't have to be a complete reversal, but we expect a pullback. I'm going to show you on a 1 minute chart, because that's what I use for entries, what you need to see and how you could have traded this move down or expected repricing from this level. And something that you should always do, whether you take the trade or not, for your learning experience, always come back and look at how could you have identified that move down. And I'm going to give you one way today, but it's all about timing, okay? It's all about timing. Now, so let me jump to, let me first set the target. So the target's always going to be some level of real support. What's real support? It's going to be down back to the order block, okay? So you could have targeted these two down candles. We've got, we move straight down into there. That's a fair value gap as well. Gold is very efficient, okay? You'll find that gold doesn't really leave any gaps on any side. It always fills its gaps, okay? Something to note. So if it was, the easy target, that I always target the easy exits, and that would be right at that, because that's where, through that price point, there's been all buy-side price delivery until we get back down to this, okay? This is also a fair value gap, but that's going to be the first point that's going to reach down to, and you could start to see price move higher from that level. So I always go for the easy target, okay? So now that we have a target set, let's jump down to a 1 minute time frame and look at how could we have traded this, okay, with the expectation of repricing lower. Now, you're not going to get this until you start to study the charts, okay? And you look at this on your own when you see these kinds of movements. So we've got at these highs, prior to 9:30, we're watching the market, okay? And our directional bias at this point in time is going to be to the downside, right? Because we're at the high of the week, high of the month. So notice that this is your 9:30 candle. It takes out all this liquidity, okay? All these longs, all this liquidity has now been taken, okay? We've got equal highs, okay? The market's engineering liquidity. And here at 9:30, we are at the absolute high of the week, of the month, of the day, okay? And that's when we get out breaking structure, okay? This is the first time we have a close below these swing lows, okay? All this liquidity. So what we now have is a confirmed directional bias to the downside, even though at a high level we were already directionally biased to the downside based on the fact that we're at the high of the day, high of the week, high of the month, and it's 9:30 a.m. Okay, which indicates a level where price is typically at the high or the low. Okay, so now we're just waiting for time. Okay, and it's at the new hour. We can see at the new hour, right at, look at the time down the bottom there, right at 10 a.m., right, 9:58, 9:59, we close this fair value gap. Okay, remember I said that gold is a market that is very efficient. Okay, it very rarely leaves gaps open. So that would be my entry right there at 10 a.m. Okay, because a new hour is starting. We've got a break in structure. I'm already directionally biased to the downside. We've taken all these highs. Okay, on the left here prior to 9:30. 9:30 also shows a 3-bar reversal pattern. Okay, I love this 3-bar reversal pattern where you have this wick in the middle candle, and then the third candle completely engulfs that structure. Okay, and we have a break in structure. We're below the swing low, below all the swing lows. Now this is just a crawl. This is where you're looking to see what's the market telling you. This is basically just a crawl up. Okay, and you get a movement into that fair value gap right on the new hour. Isn't that amazing? Right on the new hour. Okay, so that's what you've got to do. You've got to go back and you've got to study the charts. Okay, even if you didn't trade that, you've got to go back and you've got to study, identify how would you have traded that with the key concepts. Okay, not inventing things that are outside of the rules, but our rules are that time and price, fair value gaps, looking for bearish signatures if we are looking to short a market. Okay, and you can see from that point the market just continues to roll over and we get the target. Okay, that was an easy target. Okay, you can certainly have targeted lower support zones. So that is a very easy, if we just mark out entry to exit, a very easy, that move just to the top of that 4-hourly order block is over 190 pips. Could you have taken 50, 60, 70 pips from that? Absolutely, you could have. Okay, you could have also targeted the 15-minute order blocks as well on the downside. Okay, so you can see that the market's moved straight down from that level down into these two down candles. That's a 15-minute order block. Okay, and that's where it's had this current reaction from. You've got to trade it down to the 1-hourly order blocks as well. You can see these two down candles, they're the 1-hourly order block we've come down into. Okay, so there's lots of areas you could have targeted, but the easy target was just back up to the 4-hourly down candle here. These two down candles are also a good level to target as well. Okay, but I always target the easy exit. I want to be in and out of the market quick. Okay, so let's very quickly have a chat about what's next for gold. Okay, you know that longer term on the high time frame, I'm still directionally biased to the downside. Now, if you look at this little move here, this is just a chop. Okay, so this is a chop, it's a pullback. If you look at a 4-hourly chart, we have now, we've closed, we've engulfed this up candle. Okay, and that is a change in the state of delivery. Okay, we've closed, but we haven't closed below any swing low. Okay, that's your current swing low there, or this swing low. Okay, we do have equal lows down here. Okay, so watch that. Okay, and on the 15-minute right now, we are chopping. This is a chop. Okay, so this is a pullback. Okay, not a reversal. Not expecting this to be a reversal. This to me is a pullback. Okay, and we can also look at, I want to show you something else, that for those who want to trade the PM session, okay, there are trades in the PM session as well. So if I look at this, for example, this is and the PM session starts at 1 p.m. So if you're coming down to hourly bullish order blocks, if you're also coming to 4-hourly bullish order blocks and 15-minute bullish order blocks, you can expect a reaction. Okay, this here, this big wick is a rejection block. Okay, so any movement back down there should be a support zone. If we measure and see where does the midpoint come in, right, you can see that the midpoint is coming in, and that's where we're finding support. But the confirmation is on this 15-minute chart, this 3-bar pattern. Same as the 1-minute pattern we saw on the upper end. The opposite to go long is this pattern where you have the wick in the middle coming into support zone, which is the midpoint of that rejection block. Okay, I mentioned this yesterday. Look for long wicks. Okay, and you get this engulfment. Right now, you got to wait for 1 p.m. Okay, so this is the 1 p.m. Candle coming into this balanced price range, so you can expect that to hold. Okay, and your target will seem to be above these highs. Okay, so if we just measure entry from that up to that level, that's a nice 70 pips. Can you grab 50, 60 pips from that little move? Absolutely you can. Okay, but where might this be pulling into? Well, you can see if you take the range expansion of that false manipulation move down, you get the exact target. Like I've shown you this many times. That's an exact range expansion from that manipulation. Always take the manipulation leg and try to expand it in the opposite direction, and you'll find those levels are very good levels to target. Okay, so that's a nice level. You can see we're seeing a reaction from there. All this is a pullback. Okay, so I don't expect this to continue moving higher. Certainly can, but we've got to work with what we know and what our experience teaches us. Okay, now we can also look at the midpoint of this larger fair value gap, this bearish fair value gap, and that could be a target as well. When we're taking a long, you can see this alignment. Okay, right to the pip. Okay, so you've got to use multiple things to kind of align where you think the market's going. Okay, so that's a PM session. I don't trade the PM session, but that is how I would have traded the PM session if I was going to take a long there. Okay, I haven't done any of this prior to this recording. I'm doing this live with you now. Okay, you can see how the methods that I'm teaching you work with precision. Okay, and I think I've got plenty of credibility because all my trades are posted there. All my analysis is posted live on YouTube and on Twitter in my profile. Okay, so where could we go to from where we are now? Well, I'm going to give you a very easy way to kind of identify that. Let's assume that this is the manipulation leg. Okay, it's not the manipulation leg right now because we haven't closed below it. Okay, but if we take that up movement there on this 4-hourly chart, we could project down okay, and see where does that align with. So if I assume that's the manipulation leg, I just grab the range and do a range expansion lower, you can see it aligns with coming into this 4-hourly order block, also this fair value gap, okay. So if we kind of mark out, let's just mark out this fair value gap here, that target completely aligns with this fair value gap. That's not a trade recommendation, okay? I'm just showing you how you can forecast future price action using, that's just a mathematical target, that's all that is, okay? Notice it's also below these equal lows, okay? So as I said, watch this level, okay? It'll be a very volatile later few days to the end of the week because of all the news that we have, okay? Let's have a quick look at the calendar. So today is Wednesday for me in Sydney, okay? So we do have some news at 2 p.m. So that's the London session. Okay, so there'll definitely be some movement in the market at 2 p.m. today. And then we have more USD news on Thursday, tomorrow, in the New York session. So as I said, next 3 days is going to be very volatile. We've got Fed chairman also speaking at 10 a.m. on Friday. Okay, so in these volatile news announcement days, the market can do anything. Okay, so you've got to be careful, got to be nimble, and always manage risk. Okay, but this channel is all about learning about price action. Okay, how to identify key movements in the market, how to identify real support and resistance levels using the ICT concepts. Okay, so monitor the market in particular. Look at this little pullback. Okay, to me, this is just a pullback and not a reversal, meaning that yes, we've come down into these order blocks and the hourly order block and the 4-hourly order block. I don't feel this is going to reverse back up. I feel that this is just a pullback, okay, choppiness to go lower, okay. Hope the video is useful. I will now talk with you in a future video.